Porinju, good morning. Thanks a lot for joining us. Any other, are you looking at any of the textile stocks? That's the other list that's doing very well these days.
Textile stocks?
Yes.
I don't think it's in fancy as it is. No, it's a traditional kind of industrial segment in this country. The deals happening, selling out, and especially the leveraged companies selling stakes and selling non-core assets, even part of the core assets. I think that will be very important going forward also. And that will create a lot of shareholder value. That's a very positive thing, what I have been thinking about. Many companies, you and me, we may feel, this is a company which is worth, say, 5,000 crores. Whereas today's enterprise value is only 1,000 crores or 1,500 crores. That's because of that value unlocking doesn't happen. Basically because of the attitude from the promoter side. It's where the minority shareholders have been suffering. They have been waiting for long and not creating wealth in many of the stocks. I think that is going to be a major change. The architecture of the market system is going to change in that respect in the next 1 year. At least in this current financial year, you will see a lot of value addition, wealth creation happening to the minority shareholders because of these mergers, selling of divisions, kind of activities.
Okay. Porinju, one of your top picks that you like from the mid-cap space is in the aviation sector, and that's Jet Airways. Tell us about what the trigger for Jet Airways could be for the next, say, 1 year or so.
Basically, I was making a casual mention about, that stock as it is. I'm not really seriously recommending any stock. See, aviation sector, even I was talking about the hospitality, the hotels section, if you remember some time back, before the market started coming down. See, why I'm talking these sectors, India is getting ambitious, more and more ambitious. Even though there are economic challenges for us, even the middle class people, lower middle class people, they want to fly at least once in their lifetime. They want to stay in a 4-star or 5-star hotel. The domestic travel across the board is, increasing significantly. People are forgetting this fact. And there is a long way to go. And along with that overcapacity in the hotel segment, for example, even in the airlines segment, and their cost environment is getting more comfortable. So there is overall positive is happening for the shareholder perspective, from a shareholder perspective, in both these industries. Yeah. I think investors should give a serious thought, identify the stocks in those sectors which are not too much fancied, which are available at reasonable valuations. And when you do this thing, when you do this exploring of these kind of companies, one cannot be using the traditional way of analyzing the company and number crunching. That may not work. We have to take a longer view how these companies are going to perform in the next 2, 3, 5 years' time in this country, in the given economic environment and the industry environment. I'm telling you, these companies, some of the industry leaders are available at just $1 billion valuation in hospitality or in airlines. And even on a comparison basis, I had, in fact, mentioned Jet Airways on 300 rupees, at 300 rupees some time back.
And one of the spaces that you have been interested in is the infrastructure space, where you're looking at names like IRB Infra, etc. It's been long awaited, the recovery in the capex cycle, but we haven't seen so much evidence of that just yet. Do you expect things to pick up in the quarters to come?
Definitely, Sonia. I expect dramatic changes happening in that sector in the country for the next many, many years. We all know stock picking is a big challenge in that sector when you talk about infrastructure. Most of the big old companies, they have gone like bankrupt and too much leveraged. But at the same time, when there is a exploding growth happening in that segment, don't underestimate the growth what I'm talking about in the infrastructure. On all segments of infrastructure, unprecedented kind of activities going to happen next many years. Lakhs of crores worth of bids are going to be invited, and which companies are placed to execute them properly, and who has got a proper balance sheet to do it. And some of the leveraged companies also will benefit because there are multiple aspects, positive aspects to this infrastructure story today. One is, most of them are leveraged. The interest rates are going to come down. It will further decline. I'm not talking about a week or next week kind of thing. India's interest rate will be on a structural decline for next many years. So that will help these companies one way. Secondly, too many and enough and more kind of orders coming up. So the margin of profits will go up. And thirdly, their operating environment is changing for better. I don't know how many people are aware about, a major change which took place 2-3 months back, legislation about the arbitrage proceedings. The biggest enemy of these companies were, the receivables they had a big problem of receivables. There will be some quarrel, somebody will go for the arbitration, and the arbitration proceedings take 5-6 years in this country. And once you get it after 5-6 years, the party will go to the lower court for a stay. It will take another 5-6 years. So that was a nonsense happening in this country for last many decades. Now that is changed. Arbitration proceedings has to be completed in 1 year. And if somebody has to go to a court, you cannot get it from a lower court, any stay kind of things. You have to go to a higher court, something like high court equivalent. There is a commercial wing for the high court is functioning now for these things. So these are the major positive changes happening in this country like never before. And infrastructure companies with these kind of exposures will be a major beneficiary of these kind of things happening. And all around, I am very bullish on the infrastructure companies. But again, I am telling you, there could be challenge in picking stocks. You have to compromise on certain aspects of these companies regarding balance sheet or management quality or kind of things, but never compromise on the execution capabilities. So I feel many multi-baggers emerging from the infrastructure segment.
Okay. I would have expected NCC in that list because that's a company with low debt. You're not looking at that one?
I haven't traded on NCC. I recently have been looking at these companies, like IRB and perhaps Simplex Infrastructure, one company which is having a very good amount of debt, of course, but they're a very large company with 8-9, almost all verticals of infrastructure. Maybe somebody want very clean companies without debt kind of thing, maybe a KNR construction or maybe a J. Kumar infra kind of companies are there. But there are a lot of them. I need not really explain. Our investors are very smart. Let them go and do the homework. But I am very bullish on the sector because of all the aspects are in favor of them.
Porinju, when we had done that show 16 for 16, I remember you giving us one stock which was Biocon, which you were quite bullish on at that time. It's had a fairly volatile run since the start of the year. It's gone from 500 down to 450 and now it's climbed back up to 490. Looking at the volatility, would you tell investors to avoid it or is it still a good buy for the year?
Oh, for me, there was no volatility for these stocks, Sonia. If you remember, I recommended the stock at 482. Even today it is 482. So there was zero volatility for me as an investor. The volatility what you saw is for gamblers.
Okay. Is there anything in the consumption space that you like, Porinju?
I don't know. See, more than consumption, Lata, I'm telling you, it's an India growth story. People are they are very conveniently missing the big picture. India will dealing
No,
from
because you told us, hospitality and aviation simply because Indians want to live better. It was on the same line. I was wondering if there are, the Indians want to live better idea which you're playing in the consumption space.
Yeah, consumption is already a theme. Everybody is chasing that. I have a habit of avoiding that what the whole market chases. But the consumption story in India, it is very much intact. Even though, see, when we talk about 1 billion people or 1.3 billion people, we have only 500 million people in this country who can spend money. The other half of this country is traditionally kept poor people because of the earlier bad political management of this country last many decades. So it may take another 10 years to bring a lot of those people into the consumption theme, So if we succeed in bringing at least 75-80% of our Indians from that extreme poverty and bring back to better quality of life, I think it is another big boost to the consumption story in this country, which is happening today. But if you give 10 years, for that kind of a governing culture in this country, I'm telling you, I'm extremely bullish on this country. And today we are growing at 7.5% or 8% kind of things. Lata, people are just ignoring the big story on India. See, if not India, where are these people, the global investors, going to invest? Let me know. See, now FII money, if you remember, I was very bullish on the FII flow coming into this country. It started. I'm telling you, we may find $20-25 billion coming into Indian markets from FIIs alone in this financial year. And even domestic investors, there was a serious wrong allocation of assets in this country by the domestic investors in the last one decade. I just read somewhere, Indians bought around 260, 270 billions worth of gold in the last 10 years, whereas the equity allocation is just $35 billion. So that's seriously wrong asset allocation. And one more thing, after all this, then people will ask, what is the PE for the market, the price earning multiples? We are overpriced. We are at 20, 22 price earning multiples, or even forward we are 17, 18 PE. I understand, but again people are missing the big picture. Just understanding the PE and valuing the market, it's so easy. Why should we have so many analysts in this country? So it's not that simple as it looks like. The price earning multiples has to be seen in different context.
Yeah.
Today, the economy is stressed globally and in India. We are going through many challenges. Many of those companies went into trouble. So there is the earnings of these companies are in very, very difficult times.
Yeah.
So that times, whatever earnings happens, you can even give 25 and 30 PE, if provided there is a visibility going forward after 1 year, after 2 years and 3 years, the earnings, the numbers are going to come. So India is in such a situation today.
Yeah. Point taken, Porinju. Unfortunately, out of time, but that's a very heartwarming explanation of why you should stay invested.